It's about that time of day again. My name is Joseph. It's Tuesday evening, April the 4th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish. We're trading at today's high directly into two major resistance levels. This tells us to look for two possible scenarios ahead of the highly anticipated inventory report tomorrow morning. The S&P is bullish, and a triple measured move combined with a bull channel is giving us plenty of trading opportunities for Wednesday. Gold is bearish, and the triangle on the chart tonight is telling us exactly where to and not to be trading tomorrow. The euro is bullish and trying to retest yesterday's high, and the big clue on the chart is telling us to beware chasing this move higher and look for a fake out breakout pullback in tomorrow's session. And we can't forget about the FDAX. DAX is bullish, and this narrow bull channel is telling us where to find the two most reliable trading opportunities going into Wednesday's session. Boy, I got another great newsletter in store for you guys tonight with plenty of reliable trading opportunities setting up for tomorrow's session. But before we jump into those charts, though, I do want to remind you, the only place to watch the full-length version of this newsletter video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small snippet on the YouTube channel. Make sure you go into the description of that YouTube video. There'll be a link in the description of the YouTube video. Follow that link and come join me on the blog for the full-length version at sidewaysmarkets.com. While you're here, don't forget to join the mailing list. I'll send you an email every evening when the full-length version is ready to go live. Follow me on social, right below the video there, lower left-hand side. Follow me on my many social media channels. I just put out all of the API levels you'll see later on in tonight's video. Always posting important charts, links, and updates throughout the day. Follow me on social, lower left-hand corner. Below the video tonight, grab those charts. Have those charts ready on your computer for tomorrow, right where it says click here to download today's charts. You can have them ready on your computer for tomorrow. Grab that free pass. Don't forget, if you're brand new here to SOT, if you're not an advanced member here at School of Trade, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee that. Grab that free pass in the upper right-hand corner. Please don't forget, right, if you're brand new here to the SOT community, get a great frequently asked questions page. Check it out to learn the who, what, where, when, and why. Hope you guys are having a great week. What a great day today. What a fantastic Tuesday. And of course, as I always say, though, we're only as good as our next trades. Let's get ready for Wednesday's session. Tomorrow's Wednesday the 5th. Now, of course, we talked about this earlier, right? We got the employment situation coming out on Friday, the first Friday of the month, which means the Wednesday ahead of that Friday is going to be the ADP employment report tomorrow. Now, not to worry, this isn't going to have much of an impact tomorrow, but this is going to give us a good heads up as far as what to expect for Friday's big report. So tune in at 8:15 a.m. Eastern Time for the ADP employment report. That is very often a leading indicator of what Friday's employment number will be. Most likely, probably not going to move the market around too much, but it will start to see traders placing their bets on Thursday into Friday's session. So look out for that tomorrow morning at 8:15. The big news, really, get a bunch of news you can see are coming out tomorrow morning, 3:50, 4 o'clock, 4:30 a.m. Kind of peppering of news there coming out in the London session tomorrow. Then, of course, we go into that ADP employment report at 8:15. We got some minor stuff, non-manufacturing index there at 10 a.m. I think the big news tomorrow morning, though, will be the petroleum status report at 10:30 a.m. Don't forget, I always give it that 15-minute heads up, right? 15-minute before, so 10:15 before the news comes out. For all you crude traders out there, 15 minutes before the news comes out, and don't forget to give it at least about 10 minutes after that news number comes out. Because remember, I know you guys and gals love volatility, but there's a big difference between volatility and a news reaction, right? I realize we all want to get big moves on the chart, but you got to be careful those 10 minutes after the inventory report comes out tomorrow at 10:30. Now, a little bit of a heads up on the inventory number. I just put out the levels for tomorrow on social media, Facebook, Twitter, LinkedIn, right? Follow me on social. You got those right now. I'm also going to link those numbers below the video tonight, right? So if you want to have all of the support and resistance levels that we're going to be using ahead of the petroleum status report tomorrow, right? Check below the video. Just scroll down below this video on the website here at Sideways Markets. Click the link that says click here to read more. Scroll down and you'll see that link for tomorrow's API inventory levels, right? So don't forget, right, check out that information below the video tonight. And again, if you're on my Facebook, Twitter, or LinkedIn, right, follow me on any of the social media channels, right? I sent it out just a few moments ago. Last but not least here tomorrow, we got the FOMC meeting minutes, right, as we dig into the Masters week, right? Masters this week here. I wish I had some more time to watch some television here, but I got to work hard with you guys, right? So I'll be here with you guys all the rest of the week here. FOMC meeting minutes tomorrow at 2 p.m. Anytime we have a news event in the afternoon, we know that to expect a little bit of a slowdown earlier as we go into lunch. So the bottom line for tomorrow is don't force it too late in the morning tomorrow, especially for all you E-mini traders, right? Gold traders and Euro traders, because that will be affected by the FOMC meeting minutes at 2 p.m. Eastern time tomorrow. So early start to lunch. And then, of course, again, I like to always remind you guys, give those big news reports that 15-minute prep beforehand. Then again, 5 to 10 minutes after that news comes out tomorrow. So you got some big news tomorrow, right? I think the inventory report will be the big news to shake up things on crude. I think the FOMC report, right, will be the big news for pretty much everything else tomorrow. Don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time. I look forward to seeing you guys there, and we're going to execute this plan together. Speaking about the plan, let's jump in. Now, once again on crude oil, right, I've got those API levels posted right on the chart here tonight. You can also find these levels in text format if you just scroll down and click the button that says click here to read more, right? You'll be able to copy those right off the website and grab them and put them on your chart for tomorrow. Crude is bullish, trading right at the measured move at the high of a channel ahead of tomorrow's inventory report. Now, we don't want to buy high into these levels of resistance, so our plan is to wait for buying opportunities at the low of the channel or look for a fake out breakout pullback if price pushes higher ahead of tomorrow's release at 10:30 a.m. Eastern time. So we have a situation right now, right? Real strong move higher here. We got a strong bull spike in channel, right? That spike in channel very well behaved until later on in the session. You'll notice here as the morning session turned into the middle to late afternoon, the price is overshooting the high of that channel. Now the overshoot, right, it could be a sign of more bullishness to come, and we got a plan for that, or it could also be a sign that we are a little bit overbought and the market may want to correct. So let's make sure we're ready for both of those scenarios. Scenario one would be if this double overshoot is a sign that, maybe this is a larger spike in channel. Maybe it's another spike in channel, right? So there's possibility here that we may be seeing another spike in channel forming into tomorrow. And guys, we get an inventory report tomorrow morning at 10:30. This market loves to do some crazy things before the inventory report comes out. So if the price does move higher, what you want to be watching for here tomorrow is going to be that triple measured move. You can use that as a nice, easy, right, continuation target. So project that up. That'll be a great spot there for a triple measured move, assuming we don't pull back any further. Triple measured move puts us up around that 51.71, right? That makes for a nice milestone target overhead. But what are we looking for the entry on this? Well, I don't want to buy high, and I'm going right into the measured move right now. And anytime we have a test of a measured move, we have to assume the market will be seen as relatively expensive. And if we see the price go higher, I don't want to chase after this move. I'm going to use what I call a fake out breakout pullback. The bottom line is if we keep pushing higher here, buyers are going to be really, really yearning for a chance to buy low. And that's exactly what we're going to be looking for here. A trap low, I call it a fake out breakout pullback. Get that moving average up above the measured move and look for a little two-legged pullback. Look for a little trap low, right? You don't want to go too aggressive here and buy the pullback. Look for that pullback, but look for that trap low as this price goes higher. The key is if we go through the measured move, I want to see the moving average get above it, right? Above that 51.09 measured move. But again, I got to assume that if price goes pushing higher, a lot of buyers are going to see this as being a little bit too expensive. So they'll wait for price to get a nice deep pullback, right, to buy low. Look for that little two-legged pullback or what I call a little fake out breakout pullback. We'll talk more about that. There's a few more examples of that tonight on the newsletter. As the price goes lower, we'd love to get this price going lower here, right? We got that got that bull channel low, that rising support trend line. I really like the battle zone. We have an untested reversal line there at 50.71. We have the prior day high. So we'd really like to see this price pull back, low of the channel, prior day high, pull back right into that battle zone and look for those buying opportunities from there. What you could expect in a situation like that would be something like this, right? Where the price pulls back, we see those sellers try and failure into pullbacks and then back up to retest that high, right? They'll give you a few options there, right, to buy low. So bottom line here on the crude, again, we get inventories tomorrow at 10:30, right? Remember 10:15 is the cutoff, so watch that going into 10:30 tomorrow. Fake out, breakout, pullback if the price, right, if we get that big, strong run higher. Again, the key is just don't buy high and be very suspicious of the first pullback as this thing tries to convince buyers to chase after it. As it goes lower, we're looking at the low of that channel. We're looking at the low, so that prior high of day, right? And what we'd really love to get is that chance to be a buyer off of that battle zone. Don't forget, guys, inside of the advanced classes here at School of Trade, we talk about all the specific entry triggers, right? The trade setups. Right now, we have some great locations we're looking at for tomorrow. Most important thing will be how it sets up right before we go pull the trigger. So remember, right, make sure you guys come out and join me in our advanced classes, right, and we'll take a look at these specific entry triggers. Let's keep going. On the S&P, S&P is bullish and trying to complete a triple measured move and retest yesterday's high. This bull channel is a big clue, telling us to use channel rotation to avoid buying high and stay patient for trading opportunities down at the low tomorrow. Another great example here of a channel, and another good example here of an opportunity here for the buyers to possibly get themselves in trouble here, right? Trying to buy at that high. As you can see, the sellers started off the session here with a nice strong move down, but boy, when those sellers were unable to retest that low, you'll notice they get a beautiful little trap high, right, for a selling opportunity back down. But that was pretty much where the bears finished their control here for today. That lower, right, that higher low created a rising support trend line. That rising support trend line just didn't give up, and this, of course, created a bull channel. That bull channel tells me buy low, take profit at the high, right? Great rotation so far. They got their measured move and kept going. Now what I want to do is really try to leverage this low, right? Leverage this bull channel. I'd like to get this price back down to the low of that channel, right? And be a buyer down at the low of that bull channel. Boy, it would be even nicer to see a deeper correction down into that battle zone, right? So if price pulls back, looking for the low of that channel, what we'd really love to see though is a deeper pullback, seller failure, and then being able to buy it nice and cheap, right, on the way up to triple measured move, prior day high, prior week high. These are some objectives waiting overhead. Now, we got a good plan here for if price pulls back, but what if price keeps going higher? After all, we got two big price magnets waiting overhead. We have that triple measured move and that prior day high just sitting there begging us to be retested in the overnight Asian into London session. Got a bunch of news coming out, right, in London overnight as well. So who knows, right? We may definitely see this market just slam higher here. If we do see it slam higher, obviously, I'd like to see it come all the way back, right, to the low of that channel. But you're going to be able to tell. It'll be very obvious. If we see it just slam higher into this area, then what you want to be thinking about is a spike in range. Look for that trap low and just focus your energy on buying low. That's the most important thing here. If it does just punch higher, right, resist the temptation to chase after it and buy high and try to look for that trap, find a trading range, you know, maybe a spike in channel as it goes, but the bottom line is look for some prior swings and look to buy below those prior swings. You know, the old story is, right, the rule is always the same. In a bull market, I want to buy low, but if this thing just punches higher, right, I don't want to chase after that punch because a lot of buyers will be waiting on the sidelines, waiting for the little trap, waiting for that two-legged correction, waiting for the chance to buy low, even if it does punch higher. Now, the flip side right now, right, relatively sleepy channel here. What would it take for this market to go from bullish to bearish? It would take a lot of, first of all, strength, and then it would take the moving average coming over, and the sellers would have to hold a pullback and continue to new lows, right? So we have to see what I call a successful breakout pullback, which means a lower low, hold the moving average. And if they can hold that moving average pullback, then we can start looking at this as a bear market, right? As a bear market. You'll see this across the board here tonight. Get a lot of good trends, right? But we do want to always be open-minded for if the market does.